Fears of a recession weighing on investors, especially when we see the inverted yield curve, and that has already affected consumers. Many consumers have cut back on extras like vacations and outdoor activities. A new Bankrate survey says that 68% of Americans have skipped activities because they have decided they are too expensive. Very unfortunate. And joining us live from D.C. to discuss the survey is Mark Hamrick, Senior Economic Analyst at Bankrate. Mark, thanks for coming on.
Good to be with you, Dan.
Before we dive into the survey and the cutting back on activities, just what do you make of the recession fears right now? And do you think we're at the point where the average American consumer is kind of waking up to this, or no reason to panic yet?
Well, our surveys in the past at Bankrate have indicated that consumers are pretty cautious on the future in general. Just a month or so ago, we had 1 in 5 Americans saying that they thought a recession had already begun. I look at this as yet a reminder that economic expansions do not last forever. We know very well that the current one just entered the 11-year mark. If people take this yield curve inversion seriously, as some are, this may be a signal that the expansion will not go 13 years. Well, I don't know that that's an outsized bet at this point, meaning we should be now planning for the inevitable economic downturn. And a Bankrate, we would preach that means saving for emergencies, saving for retirement. But the real question beyond that is how deep and prolonged will the inevitable downturn be? That's a question we can't answer. But again, we don't expect the next downturn to look a lot like the last one. And thank goodness for that, because that was the worst, as you know, since the Great Depression. So I don't think this is a time to lose sleep or buy canned goods, but one should have a financial plan, should be budgeting, and to prepare for the time when it's raining. You don't want to get the umbrella after that storm has already begun. The time to buy the umbrella is when they're cheaper and the sun's still shining.
So as part of that cutting back and budgeting, people are skipping out on activities. What kind of activities are people cutting back on?
Well, at the top of the list, Dan, was vacations, and we put a rather strict definition on that, to the extent that we said, did you take a break of involving one overnight stay or more? And we heard back that more than 4 out of 10 indeed had skipped a vacation in the past year. After that, concerts were high on the list. You go farther on down, even something as relatively mundane as dining or going out to a movie. So I don't necessarily look at this as bad news. I look at it as a sign that Americans are being prudent with their finances. And indeed, deeper down on the survey, we find that indeed many were trying to save money, pay down debt, et cetera, pay, in some cases, particularly for millennials, pay off student loan debt. And all of that makes good sense. We just hope, of course, that people are making progress with their financial plans as well.
Do you feel like American consumers have really been doing the heavy lifting when it comes to the economy, just making sure that they're keeping their sentiment positive, that they're still shopping, that they're still engaging with companies and their products?
Yeah, that's a great question. It's a timely one, of course, with this back and forth over whether we should impose a 10% tax on basically everything that people are going to buy for the holiday shopping season. Obviously, the administration backing off of some of that in the last 24 hours. I think that's been one of the most remarkable things about the U.S. economy, let's say for the last quarter or so, at a time when business leaders have been essentially expressing more uncertainty and more caution. Fixed investment, obviously disappointing here in the recent past. Consumers have been doing the heavy lifting, and so I think that's one of the pleasant surprises. Obviously, consumer activity accounts for about 70% of U.S. economic activity, and so the question really is, will we see a downturn in that sentiment in the not-too-distant future? Recent gauges have been fairly upbeat, and obviously then the risk is that feeds into spending. We'll get a read on retail sales here this week.
Hey, Mark, it's Heidi. Good to speak with you again. You just mentioned it. I was going to ask you about retail sales data coming out tomorrow. Investors will be focusing on that, except for the decline we saw in February. You know, we've seen a healthy read essentially for the rest of this year. What are you expecting when that data is released tomorrow?
Well, I think the consensus looks for a fairly robust reading, one that would be on the order of roughly a gain of 0.3%. And of course, you have to strip out autos. We're getting late in the cycle for auto sales to be representing a strong part of that. And of course, ultimately in this no inflation environment, we know that you go to some of these retail operations that have seen struggling stock prices. They have plenty of inventory. And so when you see declines in clothing prices across the board in the U.S., that's holding down prices. It's also providing the consumer with plenty of opportunity. But obviously, if you're talking about a Macy's that's chock full of unsold clothing, that clothing isn't selling. And so that's a sort of mixed blessing in the sense of the retail environment. Back to the survey, with consumers, expressing preferences really to pay for experiences. And even in your earlier segment, the plethora of options with streaming. It's really up to consumers to try to manage that spend at this point, to say, is there a point where I should not be paying for 5 subscriptions for video because,
right.
Frankly, it's impossible to watch everything on either Amazon Prime or Netflix.
Exactly right. I've already fallen behind in the new season of Succession, Mark. There's just too much to watch.
Get to work.
Yeah, that's right. Thanks so much. Mark Hamrick of Bankrate. We'll have to have you back on soon.
Good to be with you. Thanks so much.